Everyone, welcome back to the Market Chat. My name is Richard Moglen. Joining me today is George Tkaczuk, the Money Manager, U.S. Investing Champion of 2020. George, thanks so much for being here. Welcome to the show.
Hey, Richard. How you doing? Thank you for having me. It's great to be here with you.
Yeah, my pleasure. So it's very interesting to have you on because a lot of the people who I've been interviewing are usually investing their own money. So it's cool to see the kind of fund manager perspective of things. So I always like to start things off by asking my guests kind of how they got interested in investing and how they got started in the industry.
Okay, it's kind of a long story, so I'll try to keep it short. Basically, I was in the medical field, and actually I got a job out in Las Vegas working consultant for a workers' comp company. And the guys I met at the job, they were all talking about stocks. You know, even though I was from Chicago, a lot of my friends worked at the Board of Trade and everything. Right. I never really got into it. And then they told me this is what you need to do. So I'm like, okay. And a friend of mine hooked me up with a broker that is in Florida. I remember the first stock I bought there. It was called Laser Sight. They were making, for laser eye surgery, which was kind of a thing. So I thought, okay, well, maybe I better start learning something about that. So I actually went to the graduate school at UNLV, started taking classes in finance and economics, and that was really interesting. But as you kind of find out, well, maybe I didn't take enough. Sorry about that.
No problem.
But you learn that's not how quite the market works. And actually, when I started to learn about how the market works was actually my wife one time, I asked her to pick up a Wall Street Journal, and she went to the store and she came back with Investor's Business Daily. And I looked at it and I go, what is this? It's like all this data. It felt like, it's when you go to tractors, like they got all this data on the horses. That's what I thought it was. It tells you how I didn't know anything how things work. Anyways, make a long story short. So then I bought a book on stock market, and then there was a thing sent away for a 2-week free subscription, Investor's Business Daily. Then William O'Neill, he also sent you a tape, but then he was telling a story. I don't know if you ever heard it, where he says, if you're a store selling red dresses and yellow dresses, and the red dresses sell out, do you order more yellow dresses or do you order more red dresses? And
right.
Pretty much what's going on. That's the way the market works. So kind of fast forward, I did really well in the beginning, and then I lost all my money by about 1994, 95. And this was I started about 1991. And then, but I kept subscription to the papers, kept studying the market. And then in about 1998, I actually borrowed some money off a credit card, $10,000. Then we hit the Dotcom Bubble, and they just ran it up, trading on the margin. I was trading with 500,000 in about a year and a half, and that's then I got really hooked, really addicted, And actually, 2000, I got out in March, but I didn't quite realize what the market was about. Still trading my own money, and then just slowly through the next 2 years was just giving money away. Yeah, and realized the whole thing topped, even though I got out in March.
Right.
So, but anyways, then we fast forward 2003. My wife wanted to move back to Chicago, so we moved back to Chicago, and I didn't know what to do. But a buddy of mine was a commodities broker, and he told me they're expanding their stock division. And he says, why don't you come work with us? I was like, okay. So I met the principals of the firm. Actually, it's Series Bar. It's a bar at the Board of Trade in Chicago. We talked for about 15 minutes. And they're like, hey, can you take a test? I'm like, sure. And this is, we'll sponsor you. So, then I took my Series 7. Then I got my Series 3. That's a commodities thing. So I was a commodities broker. But, broker's a sales job. I really just wanted to manage, my money, and then, hopefully other people's money. And then the guys in the office saw what I was doing, so I actually started managing some of the other brokers' money for stock money. I couldn't get any of my clients interested in stocks because everyone was futures and options. And Chicago was a big options town. They just thought stocks was so boring. Mm-hmm. Anyways, fast forward then, MF Global basically went down. That's what I was working for, Man Financial, which later spun off as MF Global. And then they pretty much went under. A few of us ended up at Options Express, which then got bought by Charles Schwab, and then they threw us out. So we're just a few guys kind of wandering around looking for a home. And then we knew some futures guys. They started a firm, RCM Futures. Then what our CIO, Tim Webb, is actually very good. So he started a wealth advisory firm. But actually, I was lucky because he said, okay, you don't sell, you can't sell. you stay in the office. Me and my partner, Chris Chu, he's a CFA, he's an excellent financial analyst, and he says, you guys manage the money and the other guys go out and bring in the money. And that's how I ended up managing the money.
Right, right. Very cool. And it's really a stroke of luck that you picked up that first edition of Investors Business Daily. That's a great story.
Yeah, it's pretty good. And I went to all their seminars. I probably was going for multiple years, at least 2 of them every year, and I thought that was invaluable.
How are those seminars? What was your kind of favorite part of listening to Bill and the other portfolio managers speak?
Well, first part, that's where I learned how to read charts. I read the book. I didn't really understand it. I didn't get it. I bought some charting program at that time, and I didn't know what to do with it. And even then they're calling me, they're trying to sell me the daily graphs, the books. And I'm like, what am I going to do with that? I didn't know it. So, but mostly I like Bill's historic analysis. And then later when they had the master seminars, when Scott O'Neill would do the historical, just going through history, how different trends changed and which top stocks were taking over. So that was probably the favorite part.
Very cool. And outside of how to make money in stocks, are there any books that you think people, new traders and investors should really pick up and read and reread to kind of build a good foundation before they really go out for themselves and try to learn this? Well,
yeah, there's a ton of books, and I've read just about all of them that exist. The classic, of course, is Reminiscence of a Stock Operator.
Right.
That's a good story. I don't know if it's going to teach you how to trade or anything, And then John Boyke kind of condenses all the great traders in his books, and that's a really good book.
Right.
All 3 of his books. But then I think How to Make Money in Stocks is really a book that you can read it, take it, and then apply it to the market. There's actual tools there that, the other books are conceptual, and then also Mark Minervini's, both of his books are excellent too. You can read the book, you can look at the charts in the market, and then you can say, okay, here's what I'm going to try or what I'm going to do. So I'd say the O'Neill book, and of course there's the other book that Amy Smith wrote along with that. All those books supporting it, I think, are very helpful to traders to go in. And there's a lot of other books, but these are in terms of trading, I think, are the best.
Yeah, I think that's a great list for people to pick up and start with. So I'll have that link to that list in the description. People can check out those books. Yeah, definitely those are among my favorites. So I want to talk about 2020 in general, because it was a challenging year, but then a very good year for trading. And I want to kind of see how you manage the different periods of the year. So if you don't mind, if you could bring up a chart of the market in MarketSmith, and we'll kind of talk through the year and how you managed it.
Okay, so here's a stock, picture of the NASDAQ. And earlier in the year, the way it started out, and I remember, so it's kind of another kind of a crazy story. February 19th, I was up about 20% for the year already. And I thought, that's really a lot by February 19th. Now I remember texting one of my friends, one of my clients, I says, I don't want to try to guess, so we're going to stay here until we start breaking down, but I think we might be topping out here, and just because I saw some funny action. And the reason I texted them, because I was having a hip surgery February 20th. So I said, okay, I'll be in the hospital, out of it for about 3-4 hours, but I put in some stops. And so that was a Thursday, and everything still kind of looked all right. But then that Friday when I was going home, I was telling my wife, come on, can you get me home faster? I need to get out of the market, even though I had stops in, because I just saw a lot of funny price action. NVIDIA, if we can bring that up, was one of my big holdings, one of the stocks that I held for the longest time. Is it all right if I go back and change the date here so we can go take a look at that?
Yeah, of course. Go for it.
Okay, so this was sort of this was Friday the 21st, I believe. And this is I saw a lot of funny price action like this. This was the earnings, and just a lot of stocks just sort of looked a little crazy. I had AMD, Netflix, they all looked similar. And so that Friday, pretty much sold everything. I did have a small position in Zillow. Then Monday morning, it collapsed. Go go to that. You know, it looked like it was going to make a move right here, and then this boom, Monday close. I was out of everything. Now I had no idea it was going to get this bad. Everything, the whole market. You know, I thought so. I was just, you know, NVIDIA was still kind of strong. Zoom was acting pretty good. So I was messing around there, but I realized, you know, things just aren't, you know, things aren't good, you know.
Right.
So, you know, I was, you know, Zoom was showing incredible relative strength, but, you know, it was just impossible to hold. It was having 10% swings and all that. So by, you know, early March, I was completely out of the market. I think one of the stocks I kept trying was Work. You know, it looked like it was gonna, you know, have some moves here, but just failed like everything else. That just told you how bad of a market it was.
Right. So basically, you're watching kind of the leadership stocks in the market, and looking at the charts, they were kind of wide and loose. They were breaking expectations, and that kind of what cued you in that we might be in for a potential pullback or even a correction. Obviously, we didn't know the severity, but that got you on playing defense and selling proactively, basically.
Yeah, I got chipped away a few percent in early March, but that was it. Then I was just out, and then I was just sitting and waiting and waiting, you know. And then didn't start buying anything till the end of March. Somewhere there, I don't remember exactly where it was. You know, we got a follow through day.
I think it was the 4th of April, I believe, the 4th or the 6th.
Okay, because I think like on the 3rd, I started buying Tesla.
Mm-hmm.
And let's see what that worked like.
So this was one of your biggest winners of 2020, is that right?
Yeah, and actually, I was kind of familiar with the stock because we started buying it in October. Back here, if we go back the year before, it had this big move, and that was unusual. This 30 million share move, and it gapped up, and that was one of its biggest gap in its history. And this was almost one of its largest volume days. And the next day it did the same. So I loaded up. So there was something completely changed. So I got into it there, added some here. And I got out of it right before the year. So I actually missed this whole big move here in the early part of the year. But I did start buying in April. Then I was in and out of it a lot of times. But we go to July was really the period where it was right here. So, you know, we're started buying it in here, and I was buying here. I got knocked out of here. This is when Elon tweeted like the stock's too high.
Right, right.
You're killing me. I got knocked out of it, but I bought it back the next day, you know, some small amount, then added to it here, and then we actually sold into it here because it was a 50% position, and you had, this is, you know, you're almost doubling your money in no time. So you got to sell into strength. You know, normally I would sell when something's breaking down, you know, starts turning over. But if you got a big position, you got to sell into strength, you know, because, you know, you just won't be able to. And then, you know, tried it again here, got knocked out, then bought it back here, and then rode it up again, you know. So that was like this was all before the split. So actually, I forget about, you know, so then we had it again here. I actually sold it the Friday before it was going to be added to the S&P 500. I thought it's really obvious. Everyone knows that. I didn't think it would work. And I sold it in the lower part of the day, and it went up. I was like, oops.
Right.
And bought a little back of it again here, and then sold it again here in January of this year. And actually playing around with it here, but I got knocked out of it. I'm still looking, is it going to hold 800 or is it going to go down to the 50-day?
Right, right. And let me ask you this, actually going back to the 2019 run, can you talk about how you bought on that earnings gap up? Because I think that's very scary for a lot of new traders, especially seeing a huge gap like that on large volume, but there's that huge gap. They think it's going to fill. So could you talk about that process?
Sure. So when I look at these gap ups, and this is a recurring theme that was happening through, and we'll get some stocks in 2020. But when you see this volume, this just, you look back here, it's like this is greater than anything we've seen, and it's a gap up. Now at this time, if I'm going to go to the actual day here or close by it, you know, when you see such a move that's a little bit uncharacteristic for the stock, on that first gap date, I don't really want to buy a lot. I just test it a little bit, you know, and it's almost like, but the next day, if it holds this level of the first day gap, because you don't know, are the institutions selling into that strength?
Right.
Or are they accumulating shares? You have no way of really telling, you know. You sort of have, hey, this is something new feeling, so you might test it. Normally, I wait till the next day, and if it holds this level, I say, okay, they're supporting that level, and then I'm in with the funds, you know. And if you look, this level was never violated, and I can give, you know, we go back to this year. There's a lot of examples in stocks, like, you know, stocks everyone's familiar with now, like FSLY comes to mind.
Absolutely.
So if we go, let's go back to here. This is May. Okay, this was the largest volume. I think it was even a little bit larger than the IPO day. Yeah, this was 18 million. The IPO day was 16 million.
Mm-hmm.
So that's what happened there. You know, it was a earnings report, and then there's something in that report that's phenomenal. And so the question is, again, are the institutions selling into that strength, unloading it, or are they buying it? And
right.
So the key for me is, if it holds, then I'll add in. I didn't buy this day. I added in the next day. You know, and you got to give a few percent wiggle room because these things are wild. And the stock pretty much, you know, just went on its way. And this was a recurring theme. We saw it in. So let me go back to.
We've got Pinterest. Apps is another name that comes to mind.
Yeah. Apps. That one. I was playing around there with $9 and such, and I just let it go.
Yeah.
Like, you know, but like TWLO was another one. Same thing, right about that same time frame. You look here, huge volume. It just wasn't large volume. It was huge volume. And then, you know, if you just draw a line, it held that the next day, and it just never violated this level.
Right.
You know, if we look at it, and that's the way I approach that. You know, and this was, you know, Crowd did it, ZS, like as you mentioned, Pinterest. And Pinterest is kind of interesting because, so here it was, here's that move in Pinterest, and I played it the same way. I bought it here, and actually got a little shook out here, or was it somewhere here? And I said, but it's still really, you know, just because I got a little top heavy in here, but it's still holding this level. So I got back in here, and then just, all right, finally it started moving. And it did the same thing here. Had this, again, another huge volume move. It didn't hold it. It looked like it was to hold it here. So I got in here, got knocked out. But again, it recovered it. So I got back into it. And then I rode it through here, but then actually, so it wasn't really making much headway here. Got knocked out of it here. I think this is when they all said they're going to censor Donald Trump. You know?
Right.
Well, that's just Twitter, you know. Why are these guys getting in on that? I think it was Snap that made the announcement. But anyway, so we have a similar, not great volume, but again, here it is, earnings reaction, the big volume, kind of wiggles around it, and now it's above that level. And that's kind of the way I like to play those. And this last year, for whatever reason, I've never seen so many setups like that all at the same time.
Right. And it's amazing how you're pointing that out, that close on that the gap up day is such an important pivot point, because it was consolidating right above that on that first gap up, and then it on the green one, the green line that you've got marked there, the 68.93 gap up day, it messes around underneath it for a bit, but once it moves up through that level, it pulls back right to that spot, and then it goes up to 75.44. So that clearly is a key level to watch on these earnings gap ups.
Yeah, and even sometimes on bad news, you know, people see like a huge a huge red day where, big gap down. But look what happens, So again, your question is, what did everyone sell out, or does some institutions say, we'll pick it up at this level? And here's a case of Alibaba, and this other, you just don't discard a stock. Of course, if you got hurt in it, you don't want to have anything to do with it. But let's say you didn't have it and you saw this gap down, you say, hey, you know what? It's holding this level,
Right.
And it comes up like that, it brings up Arista Networks from 2017, if I can go back.
Mm-hmm.
It was big volume day, gaps down, and you're like and I got crushed in this, I was cruising along, I was happier than anything, I was in somewhere around these levels. And I'm like, oh my God. And then I just, I got out. And then I didn't quite understand how these things worked at this time. And then the stock basically, it ran to $300 from here, never really looking back.
Right, right.
And it's just, again, about holding that closing level, whether gap up or gap down, creates a pretty good line in the sand for you.
Absolutely. And could you talk a little bit about how you find the stocks that you trade, and also the key fundamentals and technical characteristics that you look for?
Okay, so I screen mostly I run a lot of different screens. I screen for volume, more, realistically speaking, meaning I run fundamental screens, I run technical screens. I can even show you this program I have written up, which is kind of, I don't know if we want to offshoot there, but we can get into that if you want.
Sure.
Okay, and then, but mostly this year it's been mostly volume, and I just make lists of all the stocks that are making notable moves in volume. That's just the kind of year that it was, and you have to act quick on them because they took off. A lot of the times I'm just running screens that are, what's the most fundamentally, the best stocks, and I use MarketSmith a lot. They have the Growth 250, so every weekend I'll go through that. I don't know if you want me to go quickly through that.
Yeah, go for
it. Sure. So, they have your weekly review, your Growth 250. You can look at that, and, here's all the stocks. They're sorted in industry group. So you go through them to give you ideas. I like to look at the target lists. I do actually, even though I'm technical, see which are the fundamentally the strongest stocks.
Right.
And I go through those charts. And if any of them are set up, I do want to try to play those, because even though I'm telling you I'm technically, but if I can find something that's fundamentally sound and the right setup, I really like to try to play those,
Right.
And my partner, Chris, who's actually a really good analyst, I throw all these different growth stocks at him. He kind of yawns, but if he finds one that he likes, then I try to really be all over it.
Right.
So that's those are the things. And then so as far as technically what I look for, a few things. So, with so we get, you get pattern recognition with MarketSmith, and they show you the standard breakouts. I normally don't try to play the standard breakouts for my first play, because I just got this feeling that maybe everybody sees it, and if everybody sees it, it might not work. I'm sort of torn between that. So a lot of times I try to cheat in on the lower thing. This marketing ingredient calls it cheat. I'm not quite sure if I'm doing it or he's doing it, but I try to find sort of like alternate entries, and then you can add on the breakouts.
Right.
So, and what I mean by alternate entries, so sometimes just, I guess you kind of call it almost a little bit of bottom fishing. I'm trying to think what would be a good example here.
Zoom, maybe?
Well, Zoom right now,
or Teldoc.
Did buy Zoom right now, and the reason I bought it, some of the things I look at. So I look at psychological price levels, meaning like $50, $100, $500, $1,000, and also psychological price valuations, 10 billion, 50 billion, 100 billion. So Zoom, Zoom was a huge stock, and I didn't think it was going to be over with. And right about here is about 100 billion valuation. I think at about 340 something. I forget exactly. And I saw this thing starting to bottom at these levels, and it coincided with the lows that it had here. And then they did a secondary, which was really well absorbed. And I said, okay, this is like a low risk entry. If I'm wrong, I'll be out so quick because I'm buying it up right along this 20-day here.
Right.
But I bought it, and as expected, you're going to run into trouble at the 50-day because maybe there's some people who want to sell it short. That's what they're going to, put in their short positions. And then, but it hung in there, and then it popped above the 50-day. Now it's above the 10 and 20-day. Now you got kind of a low risk entry. You do have overhead supply. That is a problem. But and here's this one of these high level days, which could be a hurdle for it. But if it gets over that, that would be a place where one can add to it. And then if it breaks out, it'd be another place where one can add to it. So I don't know if I'm going off track here, if that's answering a lot of different questions at one time. But
no, that's great. That's great.
In a similar, so I buy the standard breakouts, but then also I do look for bottom fish plays. And here's one that worked out successfully. And the reason I was looking to this right about this time here, this is when a lot of the growth stocks were starting to get hit. Datadog, Fastly, they rose, what they quadrupled, tripled, all these stocks. And I said, okay, maybe we need to, get away from all the hot names and see some that had a lot of good, momentum, velocity, corrected, was starting to shape up. And just kind of almost just run through your old list of stocks that did well and look at them. And here you saw it just started, I call this character change, where the stock is, okay, here it's every time it goes up, it's bumping into the 10 and 20-day. Okay. And now all of a sudden it's starting to live above the 10 and 20-day. And then that's where you can take a low risk entry. And look how great this thing just, never violated the 20-day until right here, Mm-hmm. I actually foolishly sold it here because everything in my portfolio was getting hit this date. So it's kind of a little bit of a fire sale. I didn't want to sell it, but it continued on. So, and I'm sorry, go ahead.
No, I was just going to ask if you could walk us through the MarketSmith screen and kind of talk about everything that you look at and kind of key, I guess, key levels and key criteria that you want to see before investing into a stock.
Okay, well, one of the things I want to see, it's sort of like Bill O'Neill's idea of, every base should have a prior uptrend, and it's sort of, so I'll take that as like, I want to see a stock that has velocity, meaning that one time that it moved, that it doubled or tripled at some time, that it corrected. So meaning it tells me that that stock has potential. And then I want to see it where it starts, living above its 10 and 20-day, and then I want to see some, on a normal sort of breakout, big volume coming into the stock. Some stocks, you don't kind of get that. I'm just trying to think where I'm trying to think of an example. Well, here's one. Let's VIPs, for instance, right now. Okay, it's sort of just been a little bit all over the place, but if we go look at a monthly chart, we see that it's a mover, okay? And then it's just sort of corrected. And then what's interesting, right at this level, it's at a multi-year, breaking out to a multi-year high. I get really interested in that. We saw that similar with Qualcomm. This is took 20 years, 20 years to get through this level. But once it does, it can move. So going back to VIPs, we'll go back to the daily chart. So what I like about this is it broke out, it trended above its 10 and 20-day. Okay, here went to this 50-day first time, sort of creates a shakeout, and then we get volume starts coming into the stock. So it's sort of like another kind of little breakout. You could buy it here, and now even when we had a lot of volatility in growth names, it's holding up. And more importantly, it's holding back up above that 30-ish level where we had those multi-year highs. So one of the other things I want to see is, sorry if I'm jumping around, but you can stop me and ask questions. So here's the breakout I bought today, standard breakout, first time. Well, what I liked about it was it had a shakeout already. It broke out and it shook out. So I figured everyone that tried this breakout got knocked out here. And if it revisits it, I'm really interested. And if we go to a weekly chart, it's got 1, 2, 3, 4, 5, 6, 7, 8 weeks up in a row. It tells me there was some real buying in it. The relative strength line, something I should have mentioned earlier, is, hitting a new high. That's the blue dot. And that's another really important thing, especially when we get in corrections. I'm really screening for relative strength. When the market corrects deep, those first stocks that are going to be your leaders, they're always the ones with those relative strength lines that you only kind of find with MarketSmith, that they're going to lead the market further higher. And so that's sort of like the momentum plays, but then there's sort of the other plays like Zoom. Another say play we're doing recently is NVIDIA, which kind of had a terrible relative strength line, but what I saw here is this thing's just flat. I tried it here, got knocked out here, but bought it back again here. And the reason being is, again, all these hot stocks, things got getting frothy. When you're managing a lot of money, I can't be in all those stocks. You're going to get killed. So I'm looking for something that's stable, that you can hold. And NVIDIA is like one of those stocks. And, then, okay, got lucky. It's breaking out, So, you can't ask for more on that. Let's see, what's another one? It's kind of interesting. We talked about Pinterest. And then sometimes the best laid plans don't go great. CGC. Again, we had a stock, we talked about the volume plays. So I always look for these big volume plays. It held here. I don't think I owned it here. I might have tried it. But again, here, I saw this big volume day and it held it. So got into it here. And again, it's great. It's just trending above its 10-day line. Then I guess I got it, caught in the cannabis euphoria. So I'm like, okay, I'm out of it for now. I can't handle that. So I'm sorry, I don't know if I answered the question, or you're muted, Richard.
Yeah, sorry about that. No, that was fantastic. And I wanted to ask you about the IBD ratings, the fund ownership tab here, and also looking at the earnings and sales down below. How do you use all these different resources here while looking up stocks?
Okay, so the fund ownership thing is really a big thing. So DraftKings, I got attracted to that, a few times. I tried it in here, got knocked out here. But then I'm kind of back in it here. But then what I found interesting was these are the select IBD mutual funds, and there's some interest in this stock, and that gets me interested. I look at like the ownership went from 17, 40, 65, 248, 294, 455. It's increasing. I mean, that's just, great. So you want to try to be in those kind of stocks. And this kind of had this kind of volatility contraction pattern, meaning big correction, the handle's like a little less of a correction, a little bit less. And again, this is right at the end of January where the market, those last few days of January, got hit. And this is just kind of riding right in here. So that got me interested. So I do look at the, earnings and sales. Their sales started to pick up here, but nothing really to speak of. If we look at a stock, let's say like AMD, you can see, look at these sales, 90, 50%, 40, so that attracts me. The earnings, I look at all this, the funds are increasing, now AMD hasn't gone anywhere lately, but that's just AMD, that's characteristic AMD. I would bet money this thing is going to move someday, right when it wears everybody out. It has a history of doing that. I've traded the stock since $15, and it would just do this. It would just stretch out these bases where everyone throws in the towel. It's going to go.
Right.
I mean, it did it here this summer, where it's just like, it's going to break out. No, it's not. It's not. And then it goes and it does it again. And, it has great forward-looking estimates. And so you can't ignore a stock like that.
Mm-hmm. No, that's great. And I want to ask you about portfolio management because running a fund is a little bit different than running just retail money. What is kind of your what is kind of a full position for you? What's kind of the max position you'll take? Because I think you mentioned that Tesla was a 50% position here. So yeah, kind of talk me through that process and how you like to build up to that position as well.
Okay, so I wear a few hats around here because it's firm we manage. We're still kind of small, about $230 million, and a lot of that's 401k money. So it's pretty conservative stuff. And then we have about another 75 million in some of our internal programs where my partner Chris are co-managers on that. And that's anything that gets into that is, I do a lot of idea generation. He does his discounted cash flow model. He's got to find future value in those stocks. And that's the only way those stocks get into those programs. And those programs are like 20 and 30 stock programs.
Mm-hmm.
Now, the one that I submitted to the contest and the one that I solely run, I call it concentrated high growth. And I'll have anywhere from 2 to 12 stocks in it at any one time. So it's, it sounds a little scary, but in a sense, it's not, because I have no problem going 100% cash at any given day. And if I'm wrong, I can go 100% invested the next day, So, but it is other people's money. You can't be buying GameStop with that, even, like CGC was 27% position. That's a large position, but it starts small. You build up to it. But so what my whole goal is not how much I'm going to make, but how much I'm going to lose. I mean, if I come out of this with a flat year, I'll say, great, I managed my risk. Now somebody will say like, hey, I thought you were going to make me a lot of money. I go, yeah, that's the idea, but I really want to manage the risk. And so how do I do that? I try to make sure that no one position, or we'll say one trade, will ever be 1% loss to the portfolio. So meaning if I put on a 5% position, ideally I have 20% wiggle room. I never let it get there. I'm usually more 3 to 5%. 3 is a little too tight. I get knocked out of things too quick sometimes, and that frustrates me a little. 5% is about right. 8% I think is a little too much. So anyways, let's say if I were to put on a 10% position, so I have 10% wiggle room. But really I have to keep it less. I want to keep that loss always less than 1%, because I know I'm going to hit something, and if it trends, I'm just going to let it ride. And then when I add to it, when I build a position, I don't just try not to arbitrarily add. I used to do that in the past and found out that was wrong. I try to find like where the stock is vulnerable, a danger zone, meaning whether it be a 10-day or a 50-day average.
Mm-hmm.
So my average cost when I add at higher levels will still be above those levels. So if it hits that level, I still made some money.
Right.
I didn't lose money, because before I'd buy the breakout, 10%, before I move 5%, I'm in 20%, it reverses, and I'm losing too much money. So it's very important to kind of like, you get your chart, you'll say, okay, I think this stock should hold here. If it doesn't hold here, I'm out of it. So as you scale in, try to like make sure you know where your average cost is, because otherwise, you get killed. And this way you get knocked out. Okay, at least we didn't lose money. On some like gap down reversal or something like that.
That makes a lot of sense. I want to go back to the 2020 crash and what you were doing right at that bottom. And I want to ask you, what other stocks besides Tesla were you really focusing in on and kind of seeing that relative strength cues during that March crash?
Okay, I think Shopify was another one was buying right there. So here's Shopify.
Mm-hmm.
It corrected with everything else. It's a big mover. Everyone knew about Shopify by now. It corrected, and already here it was starting to show some strength. It's relative strength line. This is still before we got any follow through in the market. By March 25th, its relative strength line hit a new high right in here. You know, it pulled back, but then it did it again in early April. So that's when I'm really looking for relative strength lines hitting new high when the stock is down. And for people who don't have MarketSmith, when I get this, what I mean by this is here was the stock's high, and here was the relative strength line, and the stock is at a much lower price down in here, and its relative strength line is above where its high was here.
Mm-hmm.
Did I explain that clear enough?
Yeah.
Yeah. And so that's what I was looking for. Another one I think I bought then was ROKU. Okay, so ROKU again, you know, this, even though it had a falling relative strength line here off the bottom, its relative strength line was starting to make, you know, recent highs, not up from here. This is a while ago, but if we compare it to this high here, where it was before the crash, the relative strength line is moving up. The stock is moving above its 10 and 20-day line, and it started. This was a short trade. It ran into this, again, here's our high volume day.
Mm-hmm.
Sure enough, I ran into it. But, you know, this is, you know, 35% move if you got it off $100, you know. So I'd have to go back and check exactly. So if you remember, during the market, what was happening, there was, we started to see days where tech stocks would get hit, and I call them like junk off the bottom stocks, like the airlines or cruise ships would have a pop. And this was kind of like they're flip-flopping like this over and over.
Right.
So that just got me interested. Okay, is there a play there? You know, look at the airlines or something. Of course, Boeing came to mind. And Boeing, one of its largest volume days here off the bottom was here. And that sort of created a line. Now, did not play it here, but just happened, you know, because I had two groups of stocks. I was looking like these, I call them junk off the bottom stocks, you know, when the tech stocks would get hit. And then it had this move here. I actually bought 15% position because it's because I knew if it didn't work immediately, 1 or 2%, I'd be out of it.
Right.
And, you know, you get lucky, it works, and then, you know, move whatever, it's like almost 40% move here in a few days. You're like, get out, take, you know, it's a gift. You got a gift, get out. And that's basically what I did. So it's not like a standard, you know, it's not a breakout play. It's not, I don't know what it is, but it's just sort of like, you have to just pay attention to what's going on in the markets, you know. Brings me back to 2008 when the oil drillers, meaning the market was falling apart.
Mm-hmm.
Am I going off tangent here, or can we go through this?
No, go for it, please.
Okay, let's go here. Okay, so the black line's your S&P. So the market's just since October of 2007, it's doing terrible, right? It's just going downhill. Was completely out of the market by January. The solar stocks were hot in the fall of 2007. But oil stocks, you know, commodities started to do really well. All of a sudden, you had all these drillers. So the point is here is like, you can't take your eye off the market at any time. You know, you have all these drillers, and basically the stock just ran, and, you know, margins just loaded up, kept loading up. And then actually got out of these stocks here. And then it broke through here. And here I thought I was going to become a millionaire, right? Loaded up, went back in. And then it took me about 3 or 4 days to convince myself, you're crazy, get out. You know? And sure enough, you know, things just deteriorated completely from there. And this was the last time I was in the market. This was in July of 2008, not until April of 2009. So it's almost a whole year, you know, and that's how bad sometimes downturns can be. But the point here was like, just, you have to keep an open mind. When things look terrible, there might be something going on in the market, you know, and you just never know about it, you know.
Very cool. And George, I want to ask you this. During a correction and also during 2020, the most recent crash, what are you kind of doing as part of your daily routine to make sure you're staying in touch with what could potentially work off the bottom? Are you making lists of stocks that you want to own, looking up the fundamental backgrounds of stocks? What are you kind of doing day to day?
Okay, so I'm running a lot of screens.
Mm-hmm.
So there's a lot of different screens, like here's all the screens. These are still from some of these from the daily graph days,
Mm-hmm.
And so I'm looking at fundamental stocks that accelerated earnings. It's the thing I like to look for. I looked at stocks that are showing high relative strength, but you have to be a little bit even careful with that, because a lot of times you just get these nothing stocks. Their relative strength will start looking good just because they've been flat, but they've been flat forever. They're not your movers.
Mm-hmm.
So just making lists, and then every weekend I'm just kind of like, you have your major watch list of about 200 names or so, but then you're trying to pull out 10 that if the market were to turn, that's something that you might look at.
Mm-hmm.
What I have here, I don't know if this is a good time to bring this up, is kind of like this master screen list. This is not perfected, but actually I think this is something how MarketSmith might do how they get their sector leaders. So basically what I have here is a score for every single stock in the market. Okay, and how this works is, you can run a screen in MarketSmith, but if your stock gets 9 out of 10 parameters, it doesn't show up, right?
Right.
You missed it. But MarketSmith has the checklist on the right-hand side. You can move that screen over and get a checklist. How does this stock score on that screen? Oh, it got 8 out of 10, or got 9 out of 10, 10 out of 10. So I chose, I think, 9 or 10 MarketSmith screens, some that came with MarketSmith and the others I created, to use as a checklist against every single stock. So I started doing that, and that took me about 15 to 20 minutes for one stock. It took too long. But then we had an intern here. The guy was a finance guy, and he was a computer programmer. And they were giving him some tasks for data entry. He wrote a program, and I think his whole summer program he finished in one day. So I heard people talking in the office, hey, has anybody got anything for this guy to do? And I heard he's a programmer. So I said, hey, can you do this? I have all these screens, and I'd like to be able to, run those screens as a checklist in every single stock in the market. You can write me a program. And it was kind of interesting because he was a Chinese national. I don't think he even understood English that well, but he completely understood what I wanted. And like in 3 days, he wrote me this program. So basically, I run it, and for instance, and then I can but it's in Excel, so you can sort on anything. And there's probably like 120 different parameters in here, and then you can just sort on the average score. So basically, this, like Logitech, it scored this last time I ran this was on January 31st. Scored 100 on a William O'Neill screen, 87 on a Warren Buffett screen, 84 on Benjamin Graham. I don't use that screen, but I just threw it in for fun. And the Marty Swag. So looking forward screen. This is one of Mike Webster's fundamental things, checklists. This is from one of our master seminars, like your ideal stock. You should have all these things. So this is a score. This has about 20 parameters, at least in here. This is an institutional demand screen. So basically that means just I'm looking for accumulation distribution, up-down volume ratio, volume increases, all these kind of things. This is a screen I created, fund quality. I looked at all the top mutual funds. I listed their stocks, and I pulled out like all their top stocks and see if I can find any characteristic qualities that all these stocks share.
Mm-hmm.
So basically, and then I have this screen here, and it's got all 5,200 stocks in it. Each one is scored, and so I play around with that, and if you look at all these stocks, they're all doing quite well, all sorted by average, so you look at these and then see if the chart's right, set it up, and you look at that.
That's very cool, because I actually do kind of the same thing. I don't know if you've seen what I post on Twitter each weekend. but I export data from MarketSmith, download it into an Excel file. I have a sorting mechanism that makes an average score, and I'm able to basically sort and find stuff, find ideas that way. I love the MarketSmith scans, and I have scans that I use, but that way, like you said, if it doesn't meet one criteria, it's not just going to completely eliminate it from your scan. If all the other stuff makes up for it, it's going to still be at the top 100 or so. So yeah, I love this. I think is a great idea, and anybody who has MarketSmith, try to make something similar to this. This is really cool. I've never seen it done the way you've done it, where you've got all the checklists built into MarketSmith, basically in Excel now.
Yeah, and the only problem is, so this was like kind of done on the fly. The intern left, so I don't know how to program this. I'm just stuck with this program. There's no way of tweaking it ever,
Right.
But I think it's pretty good. It's useful, I think. So
yeah, very cool. And do you mind going back to MarketSmith? I think you have to stop share and then reshare again, and maybe share your top 3 screens and also the criteria for each of them. I think that'd be really cool.
Okay, so I talked about the growth 250. I go through that every weekend. And I like to look at the target lists. I like to look at the relative strength. I like to look at the top fundamental stocks. Then I also have some of my screens. I call this one severe accumulation. And I'll open up the edit.
Mm-hmm.
And here we see, so the RS line's at a new high. RS 3-month ratings greater than 90, 6 months greater than 80. So I'm looking for some that's improving. The up-down volumes greater than 1.2. Prices above the 50-day, above the 200-day. Accumulated distributions of AB. Relative strength ratings greater than 70. And again, this is sort of like Minervini type template stuff. Hence above the 21-day, which is above the 50. 50 is above the 150, so a positive stock. So I like this one. The little bit of a problem is you tend to just get sometimes some crazy momentum names.
Right.
So it's sometimes it's a little bit late, but at least this screen tells me idea that there's tremendous demand for these stocks. So if you look at it now, like BIDU, okay, there's no play there for me right now. It's got earnings in a few days and it's just extended. But it's, you can just go through these and you say, okay, is this going to pull back? Is there a play here off the 20-day maybe that comes in? And this one probably might have been, somewhere in here, then we could have had a play on their upworks. The stock's been on making this screen. Kind of for a while. Now it's extended, But so you have to go through the screen every day to catch something like off a moving average. Say like, hey, this thing's got a lot of, I hate to use the word momentum, but it's got a lot of momentum. It's kind of like a momentum screen, So it just generates some ideas, something to keep in the back of your mind.
Mm-hmm.
This stock just broke out. I was hemming and hawing, didn't take it. Boom, there it is. It's on here. The stock seems a little bit thin for me. AVID Technology, but it's been showing up on here. But I just trades 500,000 shares. It's just hard for me to touch. Some of the other screens I like to do is just simple relative strength. Stocks with a relative strength is hitting new highs.
Mm-hmm.
And if it's coming out of a base, it's playable.
Would you mind showing the criteria for that one?
Oh, sure. So it's really just a few things. The relative strength line at a new high. It's composite rating greater than 90, greater than $5 in price, and at least 300,000 average volume share. I like to look at accelerated earnings.
Mm-hmm.
And again, it's just EPS ratings greater than 70, the relative strength is greater than 80. Industry, it's in the top 2 industry groups, which is, okay, we can get to industry groups right away.
Yeah, go for it.
and EPS is greater than 25%. And it's nice, MarketSmith just says our earnings accelerating last 3 quarters. Yes, so you get your screen, and again, it just gives you a bunch of names. And of course, here's our favorite apps,
right?
Which is a little bit extended, but it's those earnings have been accelerating for a long time, so that's been on the screen for a while. JD.com.
I was just going to say apps, the earnings are accelerating, the sales are accelerating, and the margins are accelerating all at the same time. That's a golden thing that I like to look out for.
Yeah, that it's a funny stock. So it was at $9 or $10. I'm like, even then, what attracted me was the fundamentals were off the charts. I'm like, well, it's so great. How come no one wants this thing? I just pretty much forgot about it, and then voila, those hurt. Palo Alto Networks. That's actually still, I think, in a viable area. Just broke out here. It has never been a top stock in that computer software. It was years ago, but it seemed like the new ones took over. But this one looks like it might have some room to run. It was stuck at this price forever at this 260, and all of a sudden it showed some acceleration, another short base and breaking out. So I think that's playable. And that's an accelerating earnings. That's sort of a fundamental screen.
Right.
Oh, so speaking of industry groups, so I always ask myself, if you're not owning stocks in the top industry groups, you're in the wrong place. I look at the top industry groups, top 20 or 40. You got to have at least half your stocks have to be in those top industry groups. Otherwise, you're just not in the right ballpark. And so I do look at that, and then I also look at groups that are moving up quickly. So we look at this, and this is just to give you an idea. Am I missing something? Is there going to be a rotation? So energy, solar, auto manufacturers, of course, those are the Tesla. There's a lot of solar stocks. In the mining metal ores, they were 6 months ago, they were 64, 14, 10, 7, and so I'm looking at, Vale, Freeport-McMoRan, or, Rio Tinto, all those stocks, is there going to be, are we going to get inflation, and are these stocks going to take over the leaders, because a lot of the computer softwares, they dropped down. I think they're about to 94, retail department stores are doing well, but it's not a big group. But, so I look at, like, for instance, there's only 7 stocks in this group, so I'm not that interested, but still it was 162, 11, 10, so you want to be looking at sometimes just which stocks move up off the bottom, so you got the oil, gas, royalty trusts. That's interesting. Again, talking about the inflation plays. Banks, super regionals where they're 106 months ago at 175, now they're 26. There might be something there. So that's just sort of something to always keep it back of your mind. These oil exploration things, they're at 164, 192, then 35.29. That's a big move. So those are always worth a look. I haven't invested in any of those, but definitely something to consider.
Does this tell you a little bit about market conditions as well? Which stocks are leading and which stocks are moving up from 6.3 to now last week to now this current week? Yeah,
there's a few things that happen in the market that scare me. So all favorite stocks of last year, the computer software enterprise, they fell. They've actually improved a little bit, I think it was last week. But you see a lot of these, commodity related names, and that tells me like there might indeed be a rotation. We still might not be there, but it might start happening. We still have some tech, the internet content, the security software, that's security safety, sorry, computer data storage. So a few tech names are still there, but it's computer software database. I think MongoDB's doing really well there. What did scare me were these energy alternatives, the fuel cell, the plug, and the dollar power. Just historically, I remember every time I see those stocks soaring, it's over at market. Now, maybe there's something different going on now. And plus they all had reverse splits. If you look at a monthly chart, these things, they look like they were at 4,000 at one time.
Right.
Let's just say if we look at, I think fuel cell is one of them, So having a really big move now, because I really don't know if they're doing anything, but trust me, the stock was never $4,000.
Right.
They had the kiss of that, the reverse splits. So when I see these stocks moving up, I get a little nervous. And then we have this froth and these, unless it's different this time, unless these alternative energies are finally coming to fruition, that could be. I haven't invested in any of them, but I know, I don't know if you have, or I think probably some of your guests, played Plug or Valor Power. So that's a little bit concerning, but yet the market's had a lot of excuses to sell off, and it still hasn't, and that could just be because of all the liquidity.
Right.
But,
yeah. Could you go back to the screen with all the industry groups? Because I think it's important to point out that this could give you really good ideas if you keep track of the leading groups, because solar has been strong basically this entire year, number one or number two. And we've seen some amazing moves from ENPH, SEDG, Run. Just there's so many great stocks that are trending beautifully this year. And you could have found them if you noticed that the energy solar group is basically leading the market. Yeah,
absolutely. Yeah. They're doing real good. And of course, which the marijuana stocks are in one of these.
Yeah, I'm not sure. They should be in their own group now, I feel like, but
they're looks just like the chart of CGC or Torrey.
Right.
Yeah. So, and 3 months ago they were at 92, and now they're at 3. Mm-hmm. So if you could have got a play in there, just follow that. That they're in the top group. And I think that's really important. If you don't have any stocks that are in these top groups, you're not in the right place.
Right. And could you actually go to the CGC chart? Because I wanted to ask you about why you sold. I know you said it was very extended, and obviously it was, but could you talk through this trade, where you got in, and also where you eventually sold, and also why?
Sure. Okay. So it's been on the radar for a while.
Mm-hmm.
Okay. Because it's just, kind of bottoming. The story, Constellation Brands invested in them is always there. And then it's had, again, we'll go back to these high volume moves. And it seemed like it sort of started to be able to hold, it wasn't investable, meaning it undercuts them, but it kind of started crawling up above it. So again, we got to move here, this earnings report, and it's kind of held on to it. I didn't invest in it yet. I did mess around with it somewhere here. I don't remember. I tried it a few times and it failed. Just quick stops, get out. And then again, we got this big volume day. So I'm like, okay. And it held it the next day. So I got it. Did not buy it the first day, I bought it the next day. And just look at that close. It just never violated. So I said, this thing could be really good to go this time. It's overcome all this back here. It's starting to move. It's above the 10 and 20 days, above the 50 day. Had the volume, good days. So I started buying in here. And even though, the sideways movement, nothing, never violated the 10-day line. Now I wasn't adding any more up here. And it's just moving. So it had earnings. I think one of the others had earnings. Had earnings this night, and this was a reaction the next day. So it held it great. So that's really good. So today's a gap down. Okay, my cost is down in here, so it's not a problem. But just like, I don't know, this move was part of just the whole marijuana craze, and this is caught up in it, or this is specific to there. But it got up to about the 27% position, and some of that's a large position. So I just didn't want to mess around with it. I didn't know. It's a lot of shares, and every penny counts. So I was giving it to the 5-day, average. I'll use the 5-day. See the 5-day I have here. On these like up moves, I use the 5-day average a lot of times in these like vertical moves. These stocks, they tend to hold the 5-day as they keep moving. And so once it went through it, I gave it a little wiggle room. I'm like, I'm out. I might revisit the stock because look, it's at the 20-day. Maybe it bounces tomorrow right off the 20-day. Yeah, I might be wrong, but with a 27% position, I just kind of got to take the money and run. I can't mess around with it because then I'll really be giving up a lot of profit.
Yeah, makes sense. And I have a couple questions. I guess the first one is, where are you putting your stop loss when you're buying that first bit of your position on that day after the earnings gap up or the high volume gap up? I don't know if it was on earnings, probably not, but
it wasn't on earnings. I don't know if there was an announcement of some sort or somebody else reported something. One of the others in the group reported something. These all tended to move. But anyways, I was basically it was just gonna be below these lows here, or it's 3 or 5%. That's my standard thing, 3 to 5%. On position size. That's where my stop is. And once it starts going, I'm willing to give it room to my cost basis. Meaning here, I was willing to let it go all the way back down to 31 level. That's a bigger drop, but I just the nature of the move was that it holds this move, and because that's just what I saw all last year, So where was the stop loss? Was going to be at the 5-day moving average. Anytime I see these big moves, I try to give the 5-day average. So even if we look at Snapchat, for instance, it's that 5-day average is 61.99, which is slightly undercut it, and it's above it. So it's one of these kind of like big strong moves, and if it's gonna hold it, it should hold that. Let's see if the same happened in Twitter or not. It's well up above that. Twitter's again a case where here's your big volume move, it held it, and I think about 75 is its all-time high, something like that. If it can get through there, that'd be something. So again, the initial stop loss is 3 to 5%, but then it changes as it goes on. And really, what I look for, if I'm able, ideally, I want to be in the stock forever. It never turns out that way. NVIDIA was one that I held for 6 months at one time, and at that point, I'm just looking for a change in character. It's not really a percentage loss. Once I'm weighing gains, I'm looking to see like the stock is trending along its 10, 20-day consistently. All of a sudden, it just dumps massively below that. I'm going to sell that because that's a change in character. Now, truth be told, the truth is you need to hold stocks for multi-year. That's where the real money is, but it's just so hard to do. Some guys will say, well, I like to hold down to the 50-day. Well, it's just a lot of money to give up. It's so hard to do. And if it's your own account, you can do it because you can rationalize and say it to yourself. But if I got to call people like, oh yeah, we're down 20%, but don't worry about it. I can't make that argument.
No, absolutely. And I want to ask you, for your stop losses, do you set hard stops? Are you waiting till the end of the day? How do you kind of manage that?
I'm watching them. I mean, I don't enter stop in the computer, but it is kind of a pretty hard stop. And it's sometimes I might have like an intraday and an end of day stop. So meaning if something, let's say, slips below, let's say if I'm going to use a 20-day, if it slips below the 20-day intraday, I'm not necessarily acting it. But if it's closing below it, I'm probably going to act on it. I'm giving it a little bit of wiggle room, and if it slips a little bit more, then I'll sell out. So it's kind of like it is predetermined, but you got to give it sometimes a little room for intraday noise.
Makes sense. And could you actually go back to the CGC chart? Because I think there was something that I really liked there that I think is good to point out. Right before it exploded up at about, I don't know, January 16th or so, it's very tight for a few days on like no volume at all. So I don't know if that's something that you like to look for and maybe add on that next day, but I thought that was really cool. It's a really good kind of winning characteristic of these stocks right before they can explode.
Yeah, and you're absolutely right. It's like it just moves sideways and its volume dries up. That's just beautiful. And then volume picks up here and it moves up. I do look for that. I just didn't want to add any more here.
Right.
But again, and even here, when we got this little dip here, volume dried up. I mean, I was salivating. I thought, okay, this thing's going $100, $50 is the hurdle. If we go back to, here's $50. This is where it struggled last time.
Right.
So I was, surprised this morning because I was a little bit up in the pre-market and we're just gapped down like, oh boy, I can't believe it, But you gotta protect yourself, So the 5-day, it was about 47 in the morning. So right when it slipped below it, I was like, is it slipping below it? Yeah. So I was getting out at 46 level. I just had to get out, So
no, it makes sense. Maybe I mean it's 83% from the past base, so maybe it makes a nice cup of handle here, and it sets up for another run at those all-time highs.
Yeah. It could be. I mean, it's something like don't want to take your eye off. I mean, it might, the way some of these volatile names have been acting, this thing may just, bounce straight up the next day,
Yeah, but it's definitely getting wide and loose these last 3 days. That's some wild action.
Yeah.
George, I wanted to ask you about, you've mentioned a couple of times liquidity and also dollar volume. So could you explain what those kind of are, and also have a minimum level for you in terms of either number of shares traded on a day or dollar volume if you use that?
Okay, I don't, I don't calculate dollar volume, I'll be honest with you, but I do look at, but in a sense, I kind of do, but it's not an official calculation. Meaning, if something's trading 800,000-900,000 shares a day, I might look at it. Now, if it's a $300 or $500 stock, sure, for sure look at it. If it's a $10 stock or $20 stock, it's trading 800,000-900,000 shares. Even that's a little bit light. I need to see at those lower levels, let's say, $10 to $20. I need to see 1 million, 3 million shares traded. Just because here's what sometimes happens, you don't plan for it. You think well, no, I think I can do it. So you get in, you buy amounts, you buy a little bit more, and all of a sudden you realize, okay, I got 10,000 shares, and as I'm trying to get out, I can't because that's only trades 500 to 400,000 shares a day, and just you trying to sell just 1,000 of it, you're moving the market.
Right.
So that's really bad. So so that's why trading something like Tesla was just especially the pre-split. I loved it. You get a huge position. It's only a few thousand shares, and it's trading, a few million shares a day. And so it's easy. Stocks like NVIDIA, AMD, you love those because they're just so liquid. You can trade 20, 30,000 shares, and it doesn't even change the bid ask in the stock. So I don't really have an official number. I should, but it's just sort of like I look, nah, this is I can't get into the stock. It's just too thin.
Makes sense. And I think it matters more and more the larger the account you're trading, because you're going to affect the market a little bit more with higher size. Yeah. Makes sense. So I want to ask you about overall portfolio management. Do you think there's any key concepts that people should know, whether they're retail traders or money managers, about overall portfolio management, maybe keeping some more defensive stocks along with their higher flyers to balance it out? What's kind of your views about that?
Well, so I'll call that, you don't want to have too many, I'll call it gambling stocks. You can, and so in that, I'll throw in even the biotechs, just because, any day they can have a binary event, got FDA approval or they didn't,
Right.
So you kind of want to keep that to 5 to 10% of your portfolio. For me, a big thing is having stocks, not so much how much are they going to move, but sort of, can I sit in this stock? And can I, how volatile is it? Can I live through this volatility? Because you get a lot of shares, but you can't be jumping in and out every day. It's, if you get a smaller account, it's not a big deal, but in these larger accounts, it's a problem. So overall, you want about at least 75% of your portfolio to be kind of in sort of like institutional quality, steady stocks, and the high flyers, you just have to limit that, and even in that there's a dilemma, because then you say to yourself, what's the point of having a 2% position in the stock? So what if it doubles? You get 2%. It's like the stock doubles, now you get this 2% to your portfolio. So it's sort of like a thing you keep going back and forth on. For me, for portfolio management, again, the biggest thing is don't lose money. Meaning, you just take a zillion, tiny paper cuts. It doesn't matter. Like every year, I'm 50-50 for winning stocks versus losing stocks. It's right about there. 45, 55. I'm always there. But you get winning years because you let your winners run and you just cut a zillion trades that were worthless. In reality, what happens is, and this is a funny thing, sometimes clients won't understand that. They'll say, you mean you just made money in those 3 stocks and 100 were a waste of time? I'm like, absolutely, that's the way it is, But at the time, you don't know which ones it's going to be.
Right.
So your whole year is made on like a handful of stocks, 2 to 3 to 4 stocks. And that's your whole year. And everything else was just a big waste of time, energy, heartache. But that's what you have to do, is just, cut your losses, and cut your losses. And there's been years where I've even gotten sloppy with that. I say that to you here, but even in 2018 or 2019, I let it like 3 times. I let a position cause a 4% loss, a 5% loss to portfolio just because I was ahead so much. I'm like, I can afford this. It's like ridiculous. That was the stupidest thing I could have done. I'm like, I can't believe at this stage you're doing this. I'm avoiding so many major downturns, but you get sloppy once you get ahead of the game. In that year, I was like, by March, I was up 30%. I'm like, so you're like, now you're ready to gamble. That's the worst thing one can do.
Right.
So portfolio, the most important thing is really you got to cut those losses, and you got to cut them short, because you're gonna, if you're swimming in the right stocks, like all the stocks you list, and everyone on Twitter, everyone's looking at the same stocks. So it's really how you manage them. It's not a secret like what's the hottest stock. It's really how you manage it, and all you can really control is the loss that you give to that position. And the larger the position becomes, then you got to be even a lot more stringent with the stop loss.
Makes sense.
I hope that answers your question.
No, it certainly did. And you mentioned your batting average and also just cutting losses, but do you have a sense of what kind of your average gain and average loss are, just so people can know, and also kind of the holding periods for winners and also the holding periods for losers?
Okay, the holding periods for losers are fairly short. Right away when I go in, the criteria is pretty, it's, let's say I'm buying it off a 50-day average, or if I'm buying the breakout, the criteria is there. It's like, 3, it says 3, even 5%, I think is far. It's like, it's either going to hold and it's going to work immediately, or it's not going to work, and I'm out. I'm not, but I like the stock, and no, that just doesn't exist. So the holding period on losers is very quick, unless, there was some catastrophic, gap down overnight that you couldn't control for, As far as holding period for the winners, I don't have a set target price per se. Although the stock doubles, I'm just looking to see how it's going to act if it's running into a $50 or $100 level. Now, historically, that has been very important. But last year, these stocks just blew through the $50 level. They just blew through the $100 level. I was in shock. It was even a time when the Apple and Amazon and Facebook and Google were kind of shaky. It was through the summer. And I thought, well, if these guys are shaky, the Fasties and the Data Dogs and the Pelotons, they're going to be shaky for sure. And that didn't happen at all. Those stocks just blew through those levels. Oh, okay, that's something different. So, so sorry, I was going aside here, but the idea is, so how long do I hold for? I really want to try to hold forever, but again, that never really happens because you get some crazy market action and so forth. But your true winners are always going to be the ones you held on to the longest, that you're able to stand, or at least you traded in and out of them. Because the long trends, that's just really where the big money is made. I know, like Ropel talks about this, Jim Ropel, all the time. And I'm like, how does he do that? I know he's trading some really big money. How does he sit through those downturns? That's amazing.
Yeah, absolutely. So how would you classify your own type of trading? Are you trying to sit through those bases and hold it for that long term? So do you kind of view yourself as a swing trader versus a position trader? I guess it's my question.
Yeah, not really a swing trader, not really an investor. I have to call it kind of like speculator, meaning or a trend follower. I'm trying to get in on a trend. I'm trying to ride it for as long as I can, and that was hard, of course, because we had that big correction last year. It says previous year, got into NVIDIA in August and held that all the way to February because it was just so methodical, acting well. And that's ideally the kind of stock I'd like to be in, just, following the trend, doing nothing but, sitting back, boring. So I'm not a swing trader, meaning although I did some swing trades recently, but we can get into that, why I did that. Sort of like the Boeing trade, because that was just a gift. There was no trend there. That was just a pop, C3, that AI. I played that this year. And that, can I show you that one?
Yeah, let's go through it because this is actually one that I'm in currently. I bought in just a few days ago. So yeah, I'd love to hear your take on this one.
Okay, so I was interested in this because this Thomas Sabel, who's started the company. I remember Sabel Systems from the late 90s, and Oracle ended up buying them. So I go, okay, this guy knows what he's doing. I'm interested in this. So I saw the stock come down here, and this is what interested me. Again, we talk about a psychological price level, $100 level, right here. And it held it well. Here was the high volume close off the IPO day. The stock was about 103. And I think the valuation here, right here, was about 10 billion or so, I believe. I'm like, I could try this stock right here. And, if it undercuts 100, I'll get out. So it's like, 4%. So it's a very low risk entry. Then my idea was if it clears this 130, I'll add to it. That'll be an IPO based breakout. Mm-hmm. Okay. Lo and behold, this thing just rockets. Okay, so I did an ad. I go, this is not normal activity because I thought if it goes up like this, it can reverse like this, and it just goes higher and higher. And it was like this point, it was about 167, 163. I said, this is crazy. You got to get out of this. Nothing is that beautiful in life where you move up 60% in a few days. So I got out, but I'm watching this stock again, and here it's all these IPO bases because all the traders. Know the story. Everyone's got their eyes on it, and so it's choppy and it's hard. And would I try it here on this breakout? I'm not sure yet. But of course, it's something that gets your interest. The IPO basis is like when there's so many eyes on it, they're difficult, and that's I think what causes all this volatility. I don't know if you remember that company Stoneco,
STNE.
Yeah, so that was one. Again, when news came out that Warren Buffett was buying it, and that's what created this whole madness here. It was impossible to play, Then it crashed, but now here it's trending along nicely, So initially, so I'm sorry we got off tangent here, but
no problem at all. This is great.
But that's a little bit the problem with the APIs. IPOs. Mm-hmm.
ABNB, yeah.
Yeah, so that's so was I don't even remember, so we're talking about swing trading. So in these situations you do a swing trade, but I don't have like a set target price, meaning okay, if I have in my mind 3% stop loss, I'm going to take profit at 20%. No, I don't do that. I want to let her see how far it can run, right. And then a lot of times you just got a 10% profit out of it as a reverse, but you're trying to just try to get more out of it. I just don't sell it just because it, went to 20 or 30% or even 50%. It all depends how it's acting that way, or if it ran into like 100 level, and then it's bouncing around, then it might get out of there and so forth.
Makes sense. And I've seen a couple notes on some of these different charts. Do you do any post analysis, maybe at the end of the year or at 6 months, to try to make sure you're fixing any mistakes you're making throughout the year?
I don't do a regimented post analysis like we all should. I know that. I mean, I make a lot of notes and I go back and I look. And actually, what helped actually, so this summer when I was going to physical therapy for my hip surgery, my physical therapist was interested in stocks. And I started going over there in March. So the place basically closed down. It was just me and him. He'd keep me there for 2 hours. And then he'd ask me all these stock questions. And he was very inquisitive. So I almost, at that point, I had to make notes. A lot of the notes we saw in charts was I was emailing him notes. So here's what I did. Here's what I did. So actually, if you have to explain things to someone, that causes you to make these notes and so forth.
Right.
You know, we tend to just go, hey, I remember I did this, I did that, you know. But actually, that was actually a really good lesson for me. So I was like, oh, I got all these charts marked up now because I just wanted to show him what's going on and stuff. And he's doing really well in the market. You know, he didn't know anything about growth stock investing. He was always trying to find bottoms, and he's talking about airline stocks. No. I gave him Neil's book. I go, read this, you know, and you got to look at these stocks and the movement, and he really understood it. He picked up quick. You know, I mean, you know, he was, you know, trading CrowdStrike, Zscalers, and all those stocks, you know, and a lot of stocks he picked out like XPEL at $15, and he just liked the fundamentals. He was talking about this stock down in here, and I'm like, yeah, like look, the stock really took off, you know. So.
No, very cool. And could you bring up DocuSign? Because you sent me over a document with your kind of your trades from the last year, and this is actually one of your larger losses, although by no means was it a large loss at all. I think it was just a little bit over 1% in aggregate. So can you talk about how you traded this and kind of what happened here?
You know what? I'll be honest with you. I don't remember, but maybe I tried this. I'm not sure. I had these lines drawn now because, or maybe, no, I did try. Okay, I did try this. Okay, so right here, his biggest volume close was 242. And then we had another close here, it was 243.
So very close to the same level, basically.
Yeah, and you know, and it stopped here. So that might have been from here. So I tried this. I go, okay, it's clearing these levels, and it just failed, you know. And actually, I tried it again. It failed again. But actually, I tried it here. It failed again. But actually, I'm in it now. I'm trying it from here. So what's the attraction? I started looking for stocks that were sort of like good companies that got good earnings, fundamentals, but they haven't participated in this last craze. And they seem to be start working sort of like we saw with NVIDIA. Sort of, this is similar thing, and it's got a little bit sort of like the volatility kind of contraction, a big correction, a little bit smaller. This one's about the same, but I think this was a little bit that end of January effect where we just saw a lot of selling. So I said, you know, this thing's getting back above its 50-day, 10, 20-day. All these lows are higher. I think it's a low risk entry. You know, if it fails again, I'll never trade the stock again. But for the loss, I'm pretty sure I bought it here, and I'm pretty sure I bought it here. That caused, and it fell pretty quickly. It's kind of a thin stock. Sometimes during the day, the volume dries up, and it just moves 3-4 points in no time. That's a bit of a problem with it. Let me see how many. What's the average volume? 3.5 million. But some days it's just you see the volume dries up. That's sort of like getting to know the character of the stock too. Like look at this when it rose through this whole period. There really wasn't any notable volume. Maybe here, but it was rising and just no volume. And that's sort of like DocuSign for you. And it did it before, because the year before I traded it. And it tends to do that, you know.
Right. It had that earnings gap up, I think. Yeah, right there. That started this move.
Yeah, so here it's got this move. It's a really nice move, but the volume's terrible. But that's, you know, where each stock has its character. That's DocuSign for you. So So I'm trying to stock again. So
Well, maybe it finally breaks out of this longer term base and does a nice trend like it had before. I mean, look at the earnings. I mean, triple digits, great sales. The estimates for this year and next are fantastic. So, I mean, this is a strong stock, great fundamentals.
yeah, and the idea is too that all the the crazy stocks that are just skyrocketing, maybe all that euphoria will come out and we'll go, okay, hey, why don't we buy the stocks that actually have earnings and sales? Hey, we should be there. And that's what maybe we get a rotation like that. That's what I'm kind of hoping, with through some of these.
How's the fund ownership on this one? I haven't checked it in a bit.
See.
Yeah, nice funds in there.
Yeah, they got the top funds. So that's like, again, another reason. And look, it's never had a down quarter. It just increased every quarter, 8 quarters in a row, if we look at it here. So again, that's a top stock. And then again, we got the old saying, if your stock becomes a verb,
Yep.
like Google.
Yep.
DocuSign. It's Airbnb.
I'll Uber there. Uber, Zoom, those type of names.
Yeah, Zoom. So so you can just pick your stocks just from once they become a verb.
Absolutely. I think one of the last questions I want to ask you was, what are you doing intraday to monitor your positions that you're focused on and also potentially the leaders in the market at the same time?
Okay, so basically, I am watching the stocks, making sure nothing's crazy going on. But also during the day, I'm screening for, other stocks, basically running the stocks that are up on volume. I'm basically looking at that, just get new ideas. And that's, again, a MarketSmith, they have that for you, just right here.
Right.
You're up on volume, and you can just look at those stocks. And just to give you an idea, I don't want to play them. It's so easy to get distracted, meaning over a weekend, you have a watch list, you come in a week and you say, if this stock does this, I'll buy it. And all of a sudden you're like, oh, what about that guy? Oh, what about that guy? And it's like, that's when you start getting in trouble. You sell your good stock, you buy this one, your stock shoots up, the other one goes down. And that's what you want to avoid. But it's worth always knowing like where the volume's going into, because, and then I get really mad when I miss it, when there were some really good moves and you just completely missed it because you just overlooked it. Because a lot of times just going through a lot of stocks. But basically during the day, that's really what I'm doing, is just looking, where's the volume, which stocks, But then I'll look at the industry group, how the industry groups, we have that also in MarketSmith here, the industry group performance.
Mm-hmm.
Always look at that to see which group is doing well, and then, should I be looking at stocks in that group? So that's kind of two of the things that I do look at a lot during the day.
Very cool. And I think when you went through your scans, I saw one really quickly, like Mike Webster Apocalypse scan or something like that. That one sounded interesting. So can you talk a little bit about that screen?
Yeah, this is when Mike Webster used to do his little, this was after, I guess, a big sell-off. He was looking to see which stocks were starting to close up on the weekly or daily range. So he just sort of would run through those. I haven't really used it, to be honest with you,
mm-hmm.
but recently, but I did kind of just look at it. But you just get lost in so many things, It's kind of but I have actually a few of Webster's MW from all the old, MWRS High, these are all his from the old IVD seminars from years and years ago.
So these are from the seminars that he used to do?
Yeah.
Very cool.
So, yeah, he gave us some of these. So this is just an accelerated earnings. So, again, you want someone with a good EPS rating, good relative strength, and the earnings and sales are accelerating. Current price greater than 15. It's not any lower than 50% off its highs. And again, you're seeing some good names in here. Applied Materials. What else is it? Let's see, JD.com, of course. So those are always good to go through. I even have a David Saito Chung screen.
Mm-hmm.
One of his breakout sessions he gave it. That's I always look. There's only 2 stocks, so he's pretty much just go out these ratings.
Right.
And yeah, you get 2 stocks. He's like, why do you want to look for anything else? This is all you need.
Right. Can we see the other Mike Webster screens, the top industry and also the other ones?
Top industry group. So he's earnings per share again greater than 70, relative strength. Industry groups in A, distribution ratings AB, composite ratings greater than 80. Then the EPS change up 25%, sales up 15%. It's near its highs in the 3-month relative strength ratings, greater than 80. So, and then the names in here are Tesla, Deco, Sonos. I haven't looked at that one in a while. Oh,
breaking out today.
Yeah. Okay.
What about the RS new highs and the recent IPO? I'm interested in those ones as well.
Sure. Let's look at the edit. So composite rating greater than 80, just RS line new high. Again, he just keeps these like current price always greater than 50. That's like an O'Neill thing. Off the highs minus 15%. I guess at least 250,000 shares. So again, Applied Material, Logitech, UCTT, Pinterest. Then his recent IPO screen. So let's see, he's looking for sales change greater than 15%. Current price greater than 12.
So no earnings here. That's kind of interesting.
Yeah. So it's a lot of names, 164 names. Dotcom. That's a tough stock to trade. That's one where the volume dries up on you just for no reason, 2 days, and you can't make a move.
Yep.
That's check. That's an interesting one because it looks like it was going to reverse after that earnings reaction. Then it just held it and continued on. So that's pretty good.
And this is another one that kind of didn't participate for a lot of the year and was just doing those two cups, and now it's starting to finally make a move a little bit.
Yeah, I had that one. I was playing it again here. Again, it was one of those volume moves. Then it kind of did this. So I think I probably sold out of it, but I might have tried it again. But I didn't hold on to it very long. I think I probably ended up losing money. I had a little bit of money on it.
Yeah, sounds good. Awesome, George. Thank you so much for sharing your process with us. There's always this kind of final question that I ask you. What kind of advice do you have for new traders or investors out there who want to kind of speed up their learning curves?
Okay, I think the most important thing is they need to find somebody who's been successful at trading to help them out, and like a real hands-on with a lot of examples, real-time examples. Meaning that I recommend reading O'Neill's book, marketing book, but then you need real hands-on experience, and you need to find also someone who's of your who's looking at growth stocks and it's kind of trading like you, meaning a lot of times even working at a brokerage or even my company now, what I'm doing is so different than anybody else. So it's so hard sometimes. Even you start questioning yourself because everyone's like, no, that's not the way things are done. So you need to be able to hook up with somebody somehow that's been successful at trading. So a growth stock trader believes in it and believe that you can make huge amounts of money. Because everyone will tell you, well, it is dangerous, yes, but if you cut your losses, it's not dangerous, and you can make a lot of money. So I think the most important thing is to find somebody, to mentor, whether it's some subscription service or just watch a lot of your videos. It's like great stuff. You're always given a lot of good stocks to play, and you interview a lot of good people, and so but they need to be able to do that kind of in real time. So they need to be able to converse with someone, through the day, even texting a friend, hey, what are you doing? Why are you doing that? Like,
Right.
that looks offended. Why are you buying that? So you need to be able to, and there's nothing wrong too with getting advice from somebody. I mean, your trade doesn't have to be your original idea. If you pick up an IVD or you turn on YouTube, see you talking about a stock, and look the next day, go, hey, that's great. So what? It wasn't your idea. It's so just interaction with other people, I guess, help.
No, I think that's great advice. I have a group chat with my friends. We're all interested in stocks and we're texting back and forth throughout the day, talking about what we're buying and why. So yeah, I think that's perfect. And George, thanks again for sharing your knowledge with us and spending some time with us here today. Congrats again for winning the Money Manager division. That's awesome, an incredible achievement, over 100%. That's fantastic. And yeah, thanks again for your time, and you're welcome back in the future, of course, anytime you want to. And we appreciate you coming on. For everybody watching, thank you guys so much for watching. If you did enjoy, please remember to leave a like down below and subscribe if you are new. And we'll see you guys in future videos.